Happy Monday, everybody. I hope you had a great weekend. After another action-packed week, today is March 18th, 2024, and this is your Monday market update. Last week started to the downside on Monday as markets played off the reversal and the sell-off from the Friday before. Eco data was only from China with a hot CPI print, but with so much fear of deflation in China, this was actually greeted positively. New York Fed consumer survey and inflation expectations reported in line, and the one-year inflation expectations, but the 3 and 5 year actually ticked up a little bit. That did make the market think a little bit, if only for a moment, and then back to turnaround for the day. 3-year Treasury auction went well, and stocks drifted higher. Dow closed slightly higher, S&P slightly lower, and the Nasdaq almost 0.5% lower. Tuesday had markets open slightly higher. CPI released before the open was a bit higher than expected, still up 3.2% year over year, above the Fed's desired rate of 2%. And in case you're keeping score, getting to 2% growth does not lower prices, just stops them from growing so fast. Bank of America also raised their 2024 earnings per share estimates for the S&P. Recall that last week they went up to 5,400 on the S&P for 2024, not the earnings to back it up, or not. To 235 for 2024, up 12% year over year, 275 now for 2025, up another 10%. Again, keeping score, that is over 21 times 2024 earnings at 5,100, over 22 times earnings at 5,400. Micro news moved certain stocks. Oracle came out after the close on Monday, had positive reports and forecasts. Oracle stock was up about 10% at the open of trading for the day. Along with Oracle, many of the other techs were also on the move up, the usual suspects. Market did not seem to care about CPI. Maybe they see gas and shelter as outlier inflation numbers. The CPI was hot, but not hot enough to derail the bullish feel of the markets because it was not hot enough to change the rate cut expectations. So markets focused on AI and Oracle's earnings. Lack of focus on CPI and the Fed is what I've been telling you is, in my opinion, the markets will start to focus more on valuations and earnings. We're coming to the end of this earnings season, and it was better than expected. In my opinion, I expect the markets to digest for a while and wait and see if some of these earnings predictions from the tech companies will come through. Any hiccup, and we will see some air come out of this market. Market set up for PPI and retail sales later in the week. The Dow was up almost 2/3%, S&P up almost 1.25%, and the Nasdaq up 1.5%. Wednesday saw markets open flat and dipped quickly while there was no big news to pull from, just some profit taking from Tuesday. Bond yields rose, and that was a headwind on the market. Then the news from Washington, we can call it all different kind of things, but it was pretty much a ban on TikTok in the U.S. Officially, it will allow it to stay if they are divested of Chinese ownership, but since that's unlikely, according to most, it was pretty much a ban under the Senate, and if it passes, signed into law. All of the news is about who will gain and who will lose, and also if the coming election will make a difference on this. Odd as it seemed, a large sell order at the close took broad markets into the negative territory, closing at the lows of the day. The Dow was up 0.1%. The S&P, though, was down 0.25%. The Nasdaq was down about 0.5%. Thursday was PPI day and Pi Day, 3/14, March 14th. Pi Day and PPI Day were pretty much ignored. To a larger degree, markets started higher. Again, hot PPI followed the hot CPI. As I mentioned before, not hot enough to change expectations at this time. 10-year Treasury yield did go up to about 4.3%, and that will be a headwind for stocks. Retail sales, another big one I mentioned to watch, lower than expected, and since that was not bad enough, the numbers from the last 2 months were revised lower as well. It was noticed, and again, this is as much about the growth and earnings as it is about rates. Almost to the end of the week, I wanted to wrap up what seems to be keeping this market moving higher or staying there. Overall, this move and these levels are being based on stable growth, falling inflation, a coming rate cut, and AI enthusiasm. All of that kept things from getting bad. Make no mistake, though, the news last week, CPI, PPI, retail sales, even jobs, weakened all of the cases for these particular things. If growth slows, inflation stops falling, and the Fed holds off on rate cuts, we will be left with one leg of the stool to stand on. That is AI enthusiasm. And the question is, how much more fuel does that have? We'll find out a little bit today. We'll talk about that. Overall, the Dow was down about 0.5%. S&P and Nasdaq each down 1/3%. TGIF for the markets and stocks did open slightly lower on Friday morning. Eco data was a university emission report. Sentiment was little changed and thus a bit lower than expected. Inflation expectations unchanged since last month. So overall, nothing much to see there. For all those who thought that everything always goes up, or that anything always goes up. Semis, which have been on a tear. The ETF representing a closely followed set of semi stocks was set to close out the week down 3%, the biggest loss since January when we saw a 5% drop in a week. There was really not so much else, and as I mentioned, earnings and valuations will be the focus, in my opinion, and as those reports have pretty much closed out, less news to react to. Stocks closed down on the day. The Dow was down about 0.5%, S&P down about 2/3 of 1%, the NASDAQ was down about 1%. For the week, the Dow was down by 0.2 of 1%, S&P down by less than 1/4 of 1%, the NASDAQ down by 3/4 of 1%. Into this week, some notable news. Wednesday, we'll get what so many think is still the key to the market, the Federal Reserve decision. Remember, the written decision is followed then by the press conference, and that's where the fun starts. We will get a few stragglers from earnings, but important ones. Micron and Nike. Micron is not the lead in the semis anymore, but it will be watched, and Nike will be watched for China exposure. We'll also hear from General Mills and FedEx. We'll get the market sweetheart NVIDIA presenting at a conference today, all about AI, and we'll see what comes from that. That, again, is today. We'll also get some fresh labor numbers and some eco data on Thursday and Friday. Maybe the big drama day on Friday. It's a shame that the Oscars were last week, but the government must pass some spending bills to keep the government open past Friday. And if you're itching for Fed heads, by Friday, they're back. Powell, Barr, and Bostic will all step to the podiums. This will be another big week for the Fed and even some earnings. Key growth numbers continue to be reported. Remember, if the momentum of growth is slowing, and some of these numbers are starting to show signs, this is where earnings, promises, and valuations will come into play. Please keep in touch. Let's discuss how your plan is set, regardless of what these market actions are. As I said on Friday, we will control what we can control. Come back on Friday for another planning video. Have a great week.